Hey folks, and welcome to the Pipnotic Symposium for the 30th of March 2024. Today we're going to talk about commitment of traders data, because I think it's really fascinating. That's unbelievably powerful as well, and this is something that we'll spend a little while talking about. And we're going to look at the data here that are gathered from the CFTC's website, which is a really good place to identify how certain types of traders, some speculative and some not speculative, non-speculative, are positioned relative to certain assets, commodities, like the financial markets and whatnot. They can even be like hard commodities like, excuse me, like cattle. I think they've got some here: soybeans, corn, live cattle, lean hogs, cotton, soybean meal, sugar, coffee. It's a really fascinating place, and there's a lot of data available. It's all publicly available, but it's really ugly and difficult to understand. And so I'm making this tool to help make everything super easy to understand, so that it can be used very quickly in relation to our trading. And so I just want to show a couple of examples of this, and I'm going to be incorporating this more in the symposiums because I think that the information is super powerful, and this is going to help us obtain a bias about a given asset. We can look at futures contracts for Australian dollar, American dollar, all of the major currencies, and we can use this information to position ourselves either long or short, which is fascinating. But I just downloaded the information, so typically you grab the one that you want, you click on the download and your reports, and what's happening in the background, it's just jetting out to the CFT website, and it's downloading all of these reports, and it is putting them neatly in a folder on my computer. And it looks something like this. We have a bunch of archives, and when you unpack these archives, they all contain a text file. And this text file, if I just open one quickly, we can see it looks like this. There are lots and lots of headers. That's a huge database of information. You can see there are many different rows. We have market and exchange names. We have several different dates, a bunch of codes, a bunch of old data, new data, updated data, and then we have a huge amount of information here, all relating to the futures market for a given category. So what this tool does, it reads this information. We just downloaded it, so we just updated those files that I just showed you. It just unzip them, and so now we can go to the parameter section, and we can choose which one we want to look at. Okay, so we can say we want to look at disaggregated futures only reports. We want to look at 2024, and here we select the contract, and here we have almost everything. There's absolutely everything here. But if just for the sake of example, let's have a look at gold. Okay, and then we'll display the gold reports, and then it looks like this. Okay, so here you can see a bunch of different categories. So these are the people who are submitting reports to the CFTC because they have to. Okay, and we can see they're divided into different categories. We have money managers, which are people who are speculating. We have production merchants, and production merchants are not speculating. They are hedging their risk, typically in relation to some kind of a commodity that they are dependent on buying in order to produce something. Then you have total reporting, other reporting, and non-reporting. Then we have something called open interest, and I shan't go into detail about all of them, but I'll just focus on the one that is important to us, and that is something called commercial, non-commercial, money managers, hedge funds, and stuff like this. And this is because that these groups are speculating, so they are trading this asset, in this case gold, in order to earn money, so for profit. Okay, so we want to try and look at what they're doing. So if we have a look here we have numbers of contracts. So this is a week of data, and so long positions we have 163,006 long contracts. Short positions we have 27,211. There's a huge divergence in the long number of long contracts relative to the short contracts. And so what does that tell us? Well, that tells us that people are buying way more gold futures than they are selling. Okay, so that gives us a directional bias. If we take this information and we view it from a percentage perspective, where we have 100% and we divide the number of buyers and sellers in relation to this 100% scale, you can see here we have 77% long, 23% short. Here we have 75 long, we have 25 short, and so on. And you can see that the number of long contracts relative to short contracts is increasing. And it was increasing throughout the month of January, 2nd of January, the 9th, the 16th, the 23rd. Here we have the 30th of January. So the month of January of this year, the number of sellers was decreasing. The number of buyers was decreasing. The number of sellers was increasing. And then in February, we went down a little bit. So we had a little bit more buying, and then all of a sudden we had a lot of selling, and then ever since then, okay, so the end of February, we've had an increase in the accumulating of positions to buy gold. And you can see that we can see this because we have continuously expanding percentages of long futures contracts of gold relative to the short. Okay, so we started here at 60, the next week 67, 69, 80, 84, 85, and now we have 86. So we only have 14% that are short this week relative to the 80% who are long. Okay, so if we take this information and we look at a price chart, you can see here that we have 3 months. We have March, we have February, and we have January. So going back, what did January do? January slowly, ever so slowly, sold more than we bought. So the month of January, we should see a decreasing asset price for gold. So if we go to the charts here, oops, that's the wrong tool, don't want to open a text editor. You can see here that we're slowly moving lower. Okay, slowly moving lower. And then the next month, February, which starts here, we can see that we had a decrease of the selling, we had a little bit more buying, we had a sudden increase of the sellers, and then the sellers decrease, which they continue to do. So there should have been a pullback in gold, a sharp pullback, because relative to the previous week, I mean, that's a big jump. We jumped from 29% to 40%. That's a lot. Okay, so there'll be a big sharp correction. You can see that correction right here. Okay, we had that big pullback, and ever since that correction, we only were seeing an increase, an expansion in the prices of gold. Okay, and knowing this information, when you can see what's going on like this, where you can see in early February, you can see that the number of buyers were growing relative to the numbers of sellers. You know that we only want to be buying, and currently you can see that we have way more buyers than we do sellers. Okay, and so what we would do is we would use this information to position ourselves long. We had a couple of signals, one of which has already been taken. This one here, we had an area of demand. Why demand? Because we know we only want to buy because the number of buyers contracts for gold in the futures market is increasing relative to the sellers. You can see that here. Okay, it's increasing, it's going higher and higher and higher. We had two zones. We had this zone, this one was tested, and then we had a nice departure. Prices pull back, and then we left. So we still have a long bias for this asset. So what we want to do is we want to find areas at which to buy gold. So we're on the daily chart here. Let's go to the 4-hour chart, and I've marked off a couple of areas already because I'm watching these myself. But we have this here where we have let me move this over here, where we have this area just here. Okay, it's a little rally, a period of accumulation, 1, 2, 3, 4 periods of accumulation. Then we had, this is a parent, prices left, this is a child, and prices went higher. Okay, so prices left there, there's a nice price structure there. Then prices went up here, we pulled back, so we almost rebalanced this price inefficiency. So on a smaller time frame, there'll be a very sharp move higher and a very deep retracement back. As we have a look on the 1 hour chart, we'll see that here. So a big increase, a correction, and then prices rallied, accumulated, and now we just popped higher. And so now we know we want to buy. And where do we have an area which to buy? Well, we have something right here. Okay, we have like a big zone. We have this one, parent, child, tested, and then prices left. So prices are likely going to return back to this area here. We'll box off the parent and the child. And this is where prices are likely going to disappear from. Alternatively, lower, we have another zone, excuse me, just here, which looks like this. Okay, so this is another zone that we have that's nested at the top edge of this 4-hour zone, which we can see super clearly here. Okay, so 4-hour zone, we could indeed mark it off like this. Just at the top of that area, we have the parent, we have the child, then prices left. Okay, so we have a couple of areas that we could be looking to buy at, and this is because of the stuff that we are seeing on the CFTC website, or rather the Pipnotic Compass tool. Is a really good example. This is just a really beautiful example of the way the flows are moving for gold relative to what people are doing in the futures market. Okay, we can do this pretty much for anything. Let's have a look at Bitcoin. We need to go to the traders in the financial futures. So here we have different contracts, but in here we're going to find gold. Sorry, not gold, we're going to find Bitcoin. So if I search for Bitcoin, Bitcoin, here we have Bitcoin, a Chicago Mercantile Exchange. We want that, and we want to display those results. And here we can see something similar. We have the data in from yesterday. Today is the 30th. So earlier this week we had the data come in. It's actually released. It's actually, there's it, the 26th. So the reports are made on Tuesday and they're released on Friday. Okay, so this data is actually made at the beginning of the week, this past week. But you can see here, ever since the end of February, we have been moving higher. And if we have a look at the percent relationship, you can see that, in fact, that goes even further back. We go back to the end of January. So all of February and all of March, we have seen Bitcoin in the futures market expanding. So if we have a look at the Bitcoin price chart, here we have January, here we have February. Okay, January, February, March. This whole month we have been expanding. But notice here in January we had a decrease in the price of Bitcoin. So this is January. You can see here January 87, 87, 72, but you can see there are more sellers than there are buyers in the futures market, but the number of sellers started to decrease. This happened since the beginning of the year. So you can see this, that you can see that the path of least resistance is higher. So prices are continuing to drift higher, as you can see in the information we've just had a look at now. And so we know that we want to be buying Bitcoin based on what we can see here in the Pipnotic Compass. You can see that things are continuing to expand. You can see that we had some small pauses between the second week and the third week of February. We had like a small pullback, and we can see that here. This is where we had that pullback here, rally, a pullback. Okay, and so this information comes out. It comes out at a time where you can position yourself relative to what is going on in the futures market. But here you can see that prices are rallying. We're kind of making like a pennant formation, if you will. So we're beginning to accumulate. So we go to a smaller time frame. We start the 4-hour chart, and we look for places to buy. I had a limit order to buy Bitcoin here, and I didn't trade it as an ETF that it is quoted at here on this platform. I bought it on a crypto exchange, and I didn't get filled. Price came down a few $100s for my entry. So I was just drinking some tea, and then prices left. But we still have inefficiency, so I'm expecting prices to maybe wriggle back down here. I think it was around, at least on my trading platform, about $68,000 per Bitcoin. But note here that as a matter of fact, I think we probably came back. We almost came back to the high that this area of demand was able to compromise before it wriggled north. And so I think we're probably going to come down and retest this low, try and, at least I would like that, prices to come back and revisit this base here before they continue moving higher. Alright, so let's do another example. Let's have a look at a currency pair. Let's have a look at the euro versus the British pound. Okay, so here we have a few things. We have dealers, and a dealer is not doing the same thing as asset managers and leverage money. Asset managers and leverage money, they are involved in the market for speculative purposes. The dealers are not. They are typically going to be somewhat opposite to what these two categories are doing. Okay, and so you can see here that we had a lot of selling here, and then you can see the number of sellers decreased and buying picked up. You can see buying picked up here the past couple of weeks. So if we go to the asset managers and we see what the speculative money is doing, we'll start with the asset managers. You can see here that we have an ever increasing number of sellers relative to the buyers. So you can see here we currently 38%, 37, 38, 36, 36, 36, 33, and you can see that it's ever increasing. And so the euro British pound, obviously this is a very decentralized market, so this is not all the information that we're going to see, but according to the futures market at least, this pair might begin to wriggle lower, but very, very gradually, very, very gradually. We're not seeing any huge jumps or divergences in the buyers and the sellers. So if we look at the euro British pound, you can see here, this is January, February, and March. You can see that we have a decrease in the number of buyers and an increase in the number of sellers, but it's super, super gradual. As you can see here, you can see that it's a very, very small decrease in the number of buyers relative to the number of sellers. Okay, but for the time being, we're continuing to see the number of buyers tighten relative to the number of sellers. If we have a look at leverage money, you can see a bit of an opposite situation here, where you have a lot of expansion in the buyers and contraction in the sellers. Okay, so we went from 94% sellers and 6% buyers to about 50-50 here, and this was the middle of March. So if we go back and we look at the middle of March, January, February, March, you can see here that we had more buyers. We had pretty white candles. Prices come down here and they kind of gap up. They gap lower and they close higher. Gap lower, close higher. And here we had a big push higher. Okay, so we had increasing long positions in the futures market for the euro British pound. Okay, and now all of a sudden we had a huge influx of sellers. So going back to Compass, we can see that here, huge influx in sellers. And you can see here now, you see that this 8%, 7%, 8%. So the buyers are beginning to expand now relative to the sellers. Okay, and so going back here, this means that maybe we're going to start to wriggle higher. We have some inefficiency here. We have some inefficiency here. We go to the weekly chart. We're also sitting on in the buy zone. This is like just going to mark off this whole area of demand. We have a buy zone which starts right here at the zone. Okay, and so we poked in here, a little bit more, we moved away. Now we're accumulating above this area of weekly demand just here. So if you go to the daily chart and we go to a smaller time frame, well, I'd be pretty keen on buying a little bit lower. And if you look here, you can see here we have a parent, here we have a child. There's probably something around here that's gonna hold prices. Okay, so prices could probably wriggle down into this area here and then likely move away and higher. Okay, good. So I have a bit of a cold. You'd think that you can't get a cold in Bali, but you can. I've been sleeping with the fan on and got a bit of a breeze. So drinking nice hot tea. All right, let's do another example. Let's look at some hard commodities. I don't know if I have these prices here. What we can look at, I wonder if natural gas, it's not going to be here. I think it's going to be, okay, natural gas. Okay, good. So, okay, let's have a look here. Natural gas. Because what's going on in the natural gas? You can see the natural gas is expanding. So we're moving higher and higher and higher, I'm guessing. We go here, I'm not sure if I have that. Okay, here you can see natural gas is moving lower. So we're going to have to, I think I was looking at the wrong group. Non-commercial, that's right. And so the non-commercial is speculative purposes only. We have the commercial here. The commercial here is looking at the opposite side, which is increasing selling and decreasing buying, which is what we can see in the price chart. So it appears that the commercial side of this is what's driving price for natural gas for the time being. So if we look here, matter of fact, we're just sitting in a range. I mean, we're not really doing anything. We sold off during the month of January. In February we continue to do so, and then middle of February, we started to stabilize. Now we're kind of moving in this range. Okay, and so I mean, you can do this for absolutely anything. Let's do actually another example. Let's have a look at the financial futures. Let's have a look at, okay, so on the dealer side, which I suppose you could consider the sell side, they're selling an awful lot of this asset, much more. On average, 81, I should put a moving average in here actually, but you can see they're selling way more. So this is the non-speculative side. They're just selling to asset managers and leverage money. And the asset managers are certainly buying way more than they are selling. You can see here 82, 82, 82, 81, 83, 82, pretty consistent low to mid 80s. So this is going to tell us that that the price of the S&P 500 is moving very stably higher. It's been doing so for probably quite some time. So if we have a look at the chart, this is the weekly chart. This is January, February, March. We can see here super stable continuation, expansion in the prices of the S&P 500. So prices are continuing to move higher, as we can see here, and we're not seeing any change in that sentiment. Let's see, as a matter of fact, 83, 84, 85, we're continuing to expand, which we've done. 83, we're continuing to expand. This is what we're seeing. We're not seeing this continuing, and you can see the change in the long positions versus the short positions is that we're seeing the change in the long positions is continuing to increase. Okay, which is the blue line, the light blue line here. Okay, so nothing really to do there but to continue to buy the S&P 500. Looking at the chart once more, it's just pretty clear that this is a one-sided market, and so I think we'll probably continue to wriggle north. Again, what do? Go to small time frames and you find areas at which to buy, and we have several. We see here a lot of these have already happened. Zoom out a little bit. We've got a few zones that are interesting. We have this one here. Okay, this is also this is an area where we had difficult time moving beyond. We've finally managed to move beyond from around, what does that say, the 61.87, and below that we have another one just around here, okay. And so yeah, prices are continuing to wriggle north, and so I think if prices come back down to the 51.87, 51.90ish area, I think this would be a pretty interesting area at which to buy. Anyway, well, I'm going to leave it at that for the time being. If you have any questions, please let me know. Thanks for watching, and have a good weekend. Oh, final note before I leave. I'm going on holiday for 5 days with my family, going to Hanoi in Vietnam, so we'll be gone. And I probably won't be very active in my computer and try and get some time away with my family. So if you have any emails, I'll definitely respond to those. But I'm going to see if I can stay away from the computer. But I will definitely answer your emails if you respond to me. Okay, that's it. Thanks for watching.